Good morning, or if you're in the central or eastern zones, good afternoon. How's it going? Happy Friday. It's Eric. And yeah, I was doing a little quickie live trying to get some exercise in yesterday. Just been hopping. It's not all work either, doing some home improvement type things and this, that going on. So, anyway, I want to spend about 10, 15 minutes talking about something. Maybe a little less, I don't know. But yeah, if anybody has questions about any of this, I'm actually sitting down and I got my glasses on so I can read my phone. And I'll do the best to answer any questions you guys have while I'm doing this. So, um, what I want to talk about today is if you are in business for yourself, um, then you're filling out one of several different things. Sole proprietors uh, are able to basically do their business income on a Schedule C, which I'm confident most of you have heard of that form. And it's basically an attachment of your business income. Now, if you have formed a partnership with somebody, or else you're an S corp, then you do have a separate return to file, depending on which one of those two things you are. But in any case, there is something called the Qualified Business Income Deduction, and we call it QBI deduction. It kind of grew out of, there was a domestic production, let me get this right, I think it's domestic production activities um, deduction in Section 199 of the Internal Revenue Code. And they basically did away with that, but they created this thing called Section 199A, and what they've done basically is provide small business people with an additional deduction, a kind of it's like an olive branch, I think of it as. Basically, if you follow the news and you're watching the news shortly around Christmas, before or shortly after, in 2017, I've talked about this before, the Tax Cuts and Jobs Act, or TCJA. And what that did was overhaul and reform in a huge way the federal IRS's tax code. The 1040 itself changed. They turned it into a postcard, which personally I'm not a fan of because they added a bunch of extra paper to get the same information in. So silly, but they didn't ask me first. And another thing that they did, you probably heard this thing about jobs, 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 because what they basically did is they handed C corporations, which a C corp is basically the big companies that you think of, your Targets, your Amazon, Walmart. Help me, there's a million of them, but you know what I'm talking about. Big nationwide corporations are basically an entity unto themselves and are separately taxed. But they had a straight rate of 35% that was reduced to 21%, effective 1/1/2018. And what they did for small business people is like, well, let's give them some kind of a deduction as well. And that's what the qualified business income deduction grew out of. But there are a lot of things attached to it. For example, if your business income deduction of 20% is greater than the taxable income deduction, then you are only able to take 20% of your taxable income. I don't know if I said that straight. Okay, let me back up a little bit. So, QBI is basically Cliff's Note version is you get to take 20% of your business income off as an additional deduction, and it's the line right below either the itemized or standard deduction on the 1040 postcard, okay? So, one of the conditions of that is if your taxable income is less than your business income, then you only get 20% of your taxable income, not the business. And for reasons that there are a number of different things that go into your total gross income on the 1040, not just business. One of two spouses may work a regular W-2 job and under withheld or whatever, but the case may be, QBI is got some conditions on it, and it's got some worksheets, and it's all fairly new. And it's actually, I'm going to be frank with you, one of the reasons I actually went into training to get more expert in taxes and become an enrolled agent is because I wanted to be able to help people with this. And so I actually started that training about the time that I knew these changes were coming. Or, I beg your pardon, I'm sorry. They were already in place. Yeah, I'm sorry. I had not done any tax returns because it was still in 2018. Now, I was certified in February of this year, but I actually had passed the test like 4 months earlier. The certificate, you're not supposed to call it that, but that's basically what it is, was 4 months coming because of the government shutdown, 35-day thing. 90% of IRS employees are basically sent home, and I feel sorry for the other 10% because they didn't get paid. So, but anyway, I'm just chit-chatting about that. So QBI, basically, you're kind of scratching your head wondering, is this real? Now, for those of you that have been in business for a while, got a good tax guy, or looking to get a new tax guy, by the way, don't hesitate to get a hold of me if that's the case. But if you have already done a year's tax filing as a small business person, you're probably familiar with this a little bit, but a little refresher isn't a bad thing. I make the mistake of thinking everybody knows about this stuff because I do, but that's not really the case. You are focused on what you do, which is improving people's lives by getting the best price you can for their homes by listing them, or else getting the best possible price you can for a buyer. So you need to focus on that and the rules and laws and regulations behind that stuff, and leave this kind of thing up to the experts, because basically it takes a lot of time. Now, I'm not saying that you can't do taxes, and of course there's going to be some people that took accounting in college but decided to go into real estate but are really comfortable doing it. I've actually had a client, I did a 1120S Form 4, who basically had a master's degree in accounting but just didn't want to take the time. And that's why professionals are here to assist you with things like this, not just to take your money, but they basically are giving you your time back. So in any event, I kind of went off on a little tangent there, but I live with QBI and I understand it, and there's a lot to it that it shifts all the time, but that's the other thing is I'm required to take a certain amount of continuing education to continue to understand it. So basically it's like this. Let's say that you take in $80,000 in gross revenue in commissions in 2019. Now, you're going to have your expenses, you're going to have your automobile, you're either writing off your mileage or this or that or whatever. You got all your brokerage fees, you got your desk fees, MLS fees. Make sure you basically reducing that $80,000 down to your net income. As a buddy of mine likes to say, it's not what you make, it's what you keep, okay? And that's another place a good accountant slash tax guy can help you with. So let's say out of that $80,000, you're basically able to write off $35,000 and you're claiming $45,000 in revenue, or let's just say 40,000, half, because it'll make the math easier. That means that if your taxable income isn't lower, you actually are able to take $8,000 additional qualified business income deduction. So if you're single, it was 12,000 last year. Sorry, I haven't looked it up. Don't need to know yet, but let's just use 12,000 bucks for single. So when you put that $40,000 down, then you'll be writing off your $12,000 standard deduction, assuming you're doing that. Most people do. And you'll have the $8,000 business deduction because your taxable income is higher. So you get to write off 20% of the lower of the two. In this case, that would be, oh, that's right. Hang on. Wait a second. So 40,000 bucks. Right off the $12,000 standard deduction, you're left with $28,000, and I'm left doing that math. So you are in fact doing $5,600 of QBI, because it is the lower of the taxable income or the business income, and they do calculate that after your standard deduction. So just so you know that. But still, that's 5,600 extra bucks. So you need to keep that in mind. That deduction is available to you. Okay. Now, what happens if you are not in business? And I know you guys have staff people, uh, folks that are basically the backbone of your business. I've got a couple of friends who have invaluable assistants, and they use basically W 2 and uh, pay them as employees. So, what do employees do? Well, one thing is you do want to take a look at, and this is that time of year. I want to throw this in here real quick. Now that I've addressed the qualified business income thing, if you have any questions about that, I'm not seeing anybody asking any yet, so that must be wonderfully clear. And you can Google QBI or QBI deduction and learn more about it, or always, please, send me a DM or even comment on one of my posts if you like, this one in particular, if you have any questions later and you didn't think of them right now. So let me touch real quick on W-2s and W-4s for people that are making a wage. First of all, thank you. You guys are the backbone of the United States labor force. And second of all, some things changed a little bit. People did complain last year about their refunds weren't as large. And first of all, I want to strenuously stress the point that if you are planning on getting over $1,000 or more in refund from the federal government, you're wrong. Stop doing that. You're like, wait, Eric, that's not very friendly. What the heck are you talking about? Okay, real simple. It's like this. Over withholding's great. You don't have to think about your taxes. You go to the Jackson Hewitt H&R Block, whatever, somebody cheap, or do it online, TurboTax, whatever. And you're always looking forward to a couple, $3,000 every year, and your life is good. You go out and you buy something, get yourself brand new music thing, whatever, furniture, guitars if you're a musician. People like getting that big check, and it's the status quo, and it's really a wonderful thing. But it's stupid. And again, you're saying, Eric, not very nice. What are you talking about? Well, here you go. If you are withholding more than $1,000 of your money in the United States Treasury, they get all the interest. You don't. So let's say, for example, $3,000. If you are, let's see, I'm trying to do this easy. So let me use $2,400 because it's just simpler. So that means that you're over withholding $200 additional dollars a month, right? 2,400 divided by 12 is $200. What if you had that $200 on your paycheck instead? What would you do with it? Would you put it in savings, which is always smart? I'm going to highly recommend to anybody to always save 10% of any money you make. You should always do that because you are not going to be 25, 35, even 50 forever. I have none of these things, and I didn't do it, and I'm regretting it now. So I tell you, yeah, absolutely, save 10% of your money. But in any event, so yeah, if you're expecting $2,400 refund, that is $200 a month that you could have been spending on yourself. Now you're going to say, yeah, but Eric, you're kind of taking a chance of having to pay the Fed instead. I'm like, great. Well, so what if it's just $150? So you're over withholding $500. That's the perfect amount, by the way, because that's enough to give you that peace of mind that you know that you're going to get a little refund, and the federal government is going to get their piece without you having to worry about paying in, because believe it or not, the IRS states that the federal tax system is a pay-as-you-go. Yeah, that kind of makes you scratch your head a little bit, especially if you're in business. But yeah, you are in fact actually supposed to pay as you go, and W-2 people do that automatically. But there's no reason to withhold more than you have to. So now you're saying, well, Eric, what do I do about that? Simple. Take out your paycheck and look at your gross income for the year and your federal withholding for the year. And then there is something called a publication 15. Just type this into Google, IRS Pub 15. That's 15. And there's actually a table in there where you can look up the withholdings based on how much you make in your time period, be it monthly, bi-weekly, or semi-monthly. And then you're also able to, publication 15 will have a worksheet that tells you how much to withhold. And you fill out all the things in that worksheet. And you may find that you're over withholding. But here's another strong indicator. Look at your last tax return. And if the refund line is over $1,000, you over withheld last year, if you still have the same job, that's going to give you a guideline as well. If this stuff makes you crazy, or like I say, if you want to spend your time doing what you do best instead of this, give me a call. I'm able to help people out. And a simple publication 15 lookup this time of year, it's a great way to get yourself a little bit extra money on your paycheck for Christmas. So if it's something that's going to take me about 5 or 10 minutes, I'll do it as a courtesy. In other words, I'm talking about free. So yeah, comment that you're interested in having your paycheck review done. And let's team up on that and we'll take a look at it. So I guess I've been talking for about 16 minutes. Just wanted to share a few things with you. And I'm going to have some more goodies for you, just little tidbits and tips and things like that, and friendly things. And I want to stress, if you're on here and you're interested, I'm kind of trying to pop on daily for at least the next week or two. And please ask questions. I'm looking at 4 people watching, and thank you all, Suzanne, Cheryl, Sean, and hey, Jessica, how you doing? She's an old friend. Known you for years, and great people. So I love you all for joining me here. But please feel free to ask questions. All you got to do is type in if you want. But since you're not, then I will go ahead and wrap up and urge you to a couple things. If you think of something later, you can just put it in the comments of this post once I've posted it, which I do immediately when I'm done chattering. And the other thing is that today's Friday. I said that I was giving away free copies of a book to real estate agents that were interested. All you got to do is say, yes, I want one. And basically any post I've done since Tuesday. Facebook's good at getting me the notifications, and I will hook you up. Today is the deadline. I think I'm going to let that go until, being that it's Friday, I've been working pretty hard this week. I might actually try to shut down by 6 p.m. So I will post a deadline, after which the books are still going to be available. It's only $5 on my website. Just go to owingstaxaccounting.com, and I think it says products or something like that. Come on, help me. Client area, tax business. Products, yeah. You click on products in my menu, and it says books for sale. And just go in there and buy one. It's PayPal. It's real super simple. But if you act between now and 6 p.m., I'll give you one. Okay? It's pretty cool. There's a lot of ways to save money on next year's taxes. Hey, Esther, how you doing? Sorry you're joining late. I'm just about to wrap up. But I was just saying that I'm still giving the book away that you asked for earlier. So if you're enjoying it, say something in the comments. Howard, how you doing? Sorry, I'm just about to wrap up. So I want to wish everybody a happy Friday and an amazing rest of the day and weekend, full of abundance, joy, peace, and love, as always. And please stay tuned, because I'm probably going to be back tomorrow. So y'all take care and have a wonderful day. Talk to you soon. Bye-bye.